Hey everyone, welcome back to another video. Today straight analysis is going to be on the long side, so let's get started. The first thing I want to bring to your attention in this 4-hour chart is this order block formation. Now take a look at this acceleration in trading activity. It's not every day obviously that you see such a clear high time frame pattern formation, so you can bet there are I'm sure actually there are traders, or there were traders out there itching to get in on the action under such market conditions and pounce on this seemingly great quote-unquote opportunity to make a profit from this surge in demand. Now, I purposely labeled this entire move here a seemingly great opportunity because this whole price action is, in my view, nothing more than a freaking ruse to entrap you. For those of you looking to gain some insight into potential profitable future market movements and get in front of the pack as it relates to your trade entries, the effect of such order block formations might be a good starting point. What I mean by that is that following this spike, higher highs, and then this extensive range-bound accumulation phase, price moves beyond the support level here to break structure, and through this manipulative down move, as we can see, evens out this entire inefficiency area. And now the reason why I call this a manipulation move is because this is an area that has a high concentration of retail players. And the reason how I know that is because, excluding the smart money order block factor, a good part of the top and sideways action here is an active retail liquidity pool where the smart money use their tricky ways to manipulate prices and induce, at the same time, retail to join in on the action. And it unfortunately works. When traders witness abrupt and significant rises in price, they can't help it but chase these trends without hesitation. Furthermore, the tendency of retail is often to buy at the top due to the fear of missing out on potential profits. So this entire range and price decline you see here, it's nothing more than a clever engineered move by smart money to attract and grab liquidity from the weak hands before obviously bringing prices back up. It goes without saying that smart money are experts at manipulating the price of a security, whether to drive it up or down. In fact, their guiding principle is to buy low to reduce the decline in prices and sell high to reduce the rise in prices. And as you can see from the chart, after the breakdown, we get close to retesting the order block source. We then retrace for a short time. Here only to pull back a few times as the price temporarily breaks below the block's base to print this equal low before rebounding. Now this limited driven move into the equal lows right here and then re-entry back into the demand zone is a good indication that we are on the right side of the market. Additionally, the 30-minute time frame reveals another demand zone area where prices start to move sideways after entering into the buying range, signaling that an upswing may follow. Now this is conveyed to you by way of looking first at this impulsive order block accumulation that leads to distribution, breakdown, and eventual establishment into a demand zone. Obviously, this whole dynamic and the market's fractal aspect, which allows for greater precision in our analysis, makes this trading area a primary point of interest, giving us a pretty good idea about what we should be doing. So scaling down to a 1-minute time frame, we can see the market after this stop hunt expedition retrace to the upside, break structure up here before actually going through a reversal movement that causes prices to retest the upper level of the demand zone. After a rebound and accumulation area up here, we have price coming back a few times into the demand zone and reacting really well to it, particularly after this second liquidity run, which sort of marked the temporary bottom of this range. We then finally reprise aggressively higher. Another break in market structure, as you can see from this executable time frame, follows before price retraces back into this imbalance zone. So with all of these key factors in mind, including this support level, it is evident, always in my view, that this area should be your launch point. Obviously, the top of the range is our target. And guys, on a separate note here, to ensure a successful trade, you should always wait for the price to provide clear indications that it will continue in its bullish or bearish direction before entering. Safety in trading is paramount, and being too eager can lead to costly mistakes. Alright, that should do it for today. Thanks for watching, and if you liked the video, please make sure to like and subscribe to the channel. I would really appreciate it. Thanks again, guys, and hope to see you in the next one.